My name is Faye Howard. I'm a private client tax partner at scruttonbland based in our Ipswich office, and it's a great pleasure to welcome you this afternoon to this, which is the latest in our Advisor Live series of webinars. Now, Advisor Live is somewhere between a webinar, a podcast and a training session. It's designed to be short and sweet and ideally as interactive as possible. We have got a few people on the call this afternoon, so I hope you don't mind, but we have muted your microphones, and if you wouldn't mind leaving them muted, that would be much appreciated. You will, however, see a chat box on the right-hand corner of your screen, the right-hand side, and I'm joined today by my colleague Chris George, who's the manager in our tax advisory team, and he's on hand to answer any questions that you have in real time. If we're not able to answer your questions as we go through, what we'll do is respond to you afterwards, and all of our contact details are provided at the end of these slides. What we're looking to achieve with these webinars is something that's timely, relevant, easily digestible, and hopefully engaging. And in order to have got 3 ground rules. The first of these is that we will be doing these sessions at least weekly or perhaps more frequently. They'll last no more than 30 minutes, and the aim is to make them as collaborative as possible and to ensure that we follow up in any questions raised. Really hope it's useful, and any feedback at all, please send that to hello@scruttonbland.co.uk. So without further ado, we will launch into today's subject. Topic of today's webinar is the different types of help that are available for the self-employed. Now, we've all heard about the Self-Employed Income Support Scheme, which is the main subject of this afternoon's session. But in addition to this, there is also business rates grants, business interruption loan scheme, the bounce back loan, and of course the ability to defer income tax payments on account and also VAT deferral. And that applies to any VAT payments which are due between the 20th of March 2020 and the 30th of June 2020. So essentially 1 quarter's VAT, and that's deferred until 31st of March 2021. Then finally, of course, there is the sort of catch-all safety net, if you like, which is the universal credit option. The main focus of today's session, however, is the Self-Employed Income Support Scheme. And what I wanted to do is start by talking about who actually can't make a claim under this scheme. Now, I guess the first thing to say is that we as agents aren't able to make these claims on behalf of our clients, unfortunately. The government consulted and sort of put quite a lot of thought into this, but because this process had to be turned around so quickly, and the opening of the website in order to do this had to be streamlined, the decision was made that agents can't do this. However, having said that, it is quite a straightforward process, so not potentially something that a lot of people would need assistance with. But what I want to do today is just talk through some of the relevant points relating to this scheme. If you're operating your business through a trust, again, unfortunately, you won't be able to make a claim under the SEISS provisions. I suspect that's not likely to affect a huge amount of people, but there are 1 or 2 of which I'm aware. Additionally, anybody who's had state aid in excess of limits, again, won't be able to make a claim. Now, again, I suspect this is unlikely to trouble an awful lot of people because state aid limits are €800,000 for general state aid, €120,000 for agriculture, and €100,000 for aquaculture. So unlikely to be relevant to the vast majority of our clients. Something else we knew is that anybody who submitted their 2018-19 tax return after the 23rd of April 2020 will not be able to make a claim. Regardless of whether the return's gone in now or not, if it was after 23rd of April 2020, there will be no claim available. If you filed prior year's tax returns late, again, these will not be taken into account if they were filed after the 23rd of April 2020. and returns submitted between the 26th of March 20 and the 23rd of April 20 will be subject to additional fraud checks. And I guess this is because at that point, people were aware of this, the potential for this system to come online and could possibly have made fraudulent changes to their tax returns. If, however, you've made a legitimate amendment to your tax return and that amendment was made after 6 o'clock on the 26th of March 20, that amendment will not be taken into account. So that's what we know that we can't claim. But what is the SEISS and how can we claim it? Essentially, it's a grant, which means it's not repayable, but it is subject to income tax and also to national insurance. So essentially, it's reported as income of the business, but it isn't subject to VAT. As far as VAT is concerned, it's outside of the scope. And it's designed to reimburse you really with 80% of your average monthly trading profits, capped at a maximum amount of £7,500 for the 3-month period. And this is paid in a single lump sum for that 3-month period. Now, we are living in sort of a very fast moving times in terms of the measures that are being introduced for COVID-19. So there is every expectation that this 3-month period may be extended. We have heard today that the job retention scheme for employees is being extended to the end of October, albeit with some tweaks. So it's very difficult to imagine that they could extend the scheme for employees and not offer a similar extension for people claiming under the SEISS. But having checked the guidance literally just before coming online to present this webinar, I couldn't see anything just yet to confirm that position. Now, slightly differently to the job retention scheme, if you're making a claim under the self-employed scheme, you can continue to work. You can start a new trade, a new job, and you could be employed as an armed forces reservist. However, you have to confirm that your business has been adversely affected by coronavirus in order to be eligible to make a claim. There are also some eligibility criteria. So, as I've already mentioned, you must have submitted your tax return for the 2019 year by the 23rd of April 2020. And you must also have traded in the 2019-20 tax year. So that's the year ending 5th of April 2020. You must be trading when you apply for the grant, or you would be trading were it not for COVID-19. And you have to have an intention to continue to trade into the next tax year, so 2020-21 tax year that we're in currently. So if, for example, you were planning to retire and not going to trade in 2020-21, that would rule you out from making a claim for this grant. You also have to have lost trading partnership profits due to COVID-19, and your average self-employed trading profits for the period that's being looked at, and I'll explain what that period is and how the calculation works in just a bit, but your average profits must be between £0 and £50,000. Additionally, more than half of your total income must come from your self-employed or partnership activities. Now, this whole concept of being adversely affected, I mean, it's incredibly difficult to imagine anybody who isn't adversely affected by coronavirus. And HMRC guidance is incredibly light on this. However, the guidance that they have issued gives an example of someone being able to work, unable to work because they are shielding, self-isolating, or perhaps have caring responsibilities. Or if you've had to scale down or temporarily stop trading due to interruptions in the supply chain, or reduction or complete lack of customers, clients, or staff. Now, interestingly, there is absolutely no link at all between the amount of the grant and the amount of financial loss suffered. So, it may be that you can prove that there's a reduction in your reduction in your overall customers or trade, but actually by the end of the year, the financial position may well have recovered, depending on the type of trade that you operate. The key to this, therefore, is to keeping really good records to support the fact that there has been a reduction. I'll explain in a bit that HMRC are actually using the information they have from tax returns to assess eligibility for these claims. So it's not difficult to envisage a situation whereby at the point at which your 2020-21 tax return is filed, if the profits are higher, HMRC may well want to ask questions about that. So it's probably quite a good idea to look at having something like tax investigation fee insurance if you don't already have it, because that will cover those types of inquiries. So how do we actually make the claim? Well, HMRC should have already contacted everybody they think are eligible, and that contact will be by email, SMS message, or by letter. Now, not everybody who is eligible will have been contacted, and equally, if you have been contacted, doesn't necessarily mean you are eligible. If you're contacted by HMRC by electronic means, so the email or the SMS, HMRC has specifically said that they won't put links in those electronic communications to how to claim. So if you have got something that looks to be from HMRC with a link in it, that is phishing spam email, so I would delete that immediately. There is an online eligibility checker tool. So probably the best thing to do, once you've got that letter, it will direct you to that checker tool, and that will tell you when you're actually able to make that claim. The way these claims are made, different taxpayers are able to make claims over different days. So when you receive your communication from HMRC, if you haven't already, it should tell you when you can go online to make that claim. Now, I was talking to a colleague this morning who mentioned a client who was already in the self-assessment system and became a member of a partnership, but didn't actually notify HMRC of the fact that they were a member of a partnership because they were already within the self-assessment system. Somebody like that won't have received a letter because they haven't sort of ticked the appropriate box at HMRC. So just because you haven't received a letter doesn't necessarily mean that you're not eligible to make a claim under this scheme. HMRC will assess the eligibility from the information that they already hold, and that's from previously filed tax returns. And if you go onto this online eligibility checker tool, complete the information, you will get immediate notification as to whether or not your claim has been approved. And if it is approved, the funds will be with you within 6 working days. What you will actually get is you'll see a calculation where HMRC have run through the numbers, and you'll be asked to confirm that you agree that that looks reasonable. Also that you have been adversely affected by COVID-19, and also that you haven't exceeded state aid limits. Once you've done that, then the application is essentially complete. The funds will be transferred to you. But equally, if your application isn't approved, again, you can see the calculation, and there is a process to make an appeal. What I would suggest is if you are denied the access to this grant, that you contact us, because we should be able to look at that and explain why and if HMRC are wrong. Now, to go onto this eligibility checker tool, you will need your UTR number, your national insurance number, and your government gateway ID and password. If you don't have a government gateway ID and password, there are a number of ways to obtain this. The most common way is to Google Government Gateway ID, which will take you to the Government Gateway site. However, the standard process for getting a Government Gateway account is to do this, and then HMRC will send you out a PIN number, which is essentially a code that arrives in sort of, I think they say, typically 7 days. In order to get this SEISS scheme up and running more quickly, there is a fast-track way to get a government gateway account, and that is to go onto the online eligibility checker tool and apply through that. If you do that, you skip the step where HMRC sends you a code. What they do instead is they will ask you for some government ID, such as driving license or passport, and they will use that information to verify that you are who you say you are. in the event that you don't have a passport or driving license, they will ask a financial question, and the example that they gave is when you took out a mobile phone insurance contract, for example. So they have other ways to identify you to speed up the process of getting into this system. And of course, you'll also need the bank account number and sort code of the account you would like the money to be paid into. As far as the calculation itself is concerned, basically it's based on trading profits, and what is looked at is the trading profits and the non-trading income as reported on your tax returns. And there's a 3-year eligible period. That's the tax years 2016, 17, 17, 18 and 18, 19. If you've traded for all 3 of these years, what HMRC will do is they will add up the 3 years' profits together and they will divide them by 3. And it's that figure that needs to be £50,000 or below. If you've traded for 2 continuous years, they will add together the 2 years' profits and divide by 2. However, if you've traded for 2 non-continuous years, so perhaps you only traded for 16, 17 and 18, 19, they will only take the 18, 19 figures. Now, it's not inconceivable that profits for 1 or more of those years may have been reduced by brought forward losses. If that's the case, don't worry about that. The losses are ignored, and it's the figure before losses which will be used for the purpose of these calculations. And equally, if you've got more than one trade, or perhaps you've got a sole trade, but you're also a partner in a partnership, all of these profits and losses are aggregated for this purpose. And the final test is that the sum of the trading profits must be at least equal to the non-trading income. So say, for example, you've made straight £30,000 profit a year across 3 years, traded for all of those 3 years, your trading income would be £90,000. If your non-trading income is more than £90,000, then you're not going to qualify for a grant under this scheme. But if the non-trading income is less than £90,000, then you should do. And that 90,000 is just an arbitrary example figure. The key point is that the average profits for that period must not be more than £50,000. Then once HMRC have the average profits, what they do is divide by 12 to give the monthly figure, multiply for 3 because this scheme applies to a 3-month period, and they take 80% of the figure, but of course it's capped at the £7,500. Some sort of just worth making a comment about sort of special cases. Partnerships, if you're a partner in a partnership, then in that case, what HMRC will look at is your partnership share. So if you're a partner in a partnership and your profit share is £25,000, but your partner has a share of £75,000, partner won't qualify for that year, but you potentially would do. Some partnerships have arrangements whereby any income goes into the partnership and then is distributed to the relevant partners. If that's the case, then in this situation, the grant comes into the partnership and it has to be paid out to the qualifying partner. It wouldn't get shared on the profit sharing ratio. Another quirk is if you're in a business which averages. So typically this applies mainly to farmers, but it would also affect market gardeners, artists and creative authors. For these types of trade where profits typically fluctuate, there is an averaging scheme which could be used. If you are using the averaging scheme, the averaged figures are ignored, and it's the profit before averaging which is used for the purposes of this calculation. If you've got a loan charge, and essentially this is individuals who have borrowed money from business rather than taking it as income, although this typically would apply more to those limited companies rather than self-employed. Obviously, where you've taken a loan rather than income, the income reported on the tax return is going to be very little, if not zero. HMRC have gone through a big exercise because this is essentially a tax avoidance scheme. They've gone through a big exercise of reclassifying these loans as income. However, for the purposes of the SEISS grant, it's the original reported figures on the tax return rather than the reclassified income, which would be used to determine the level of income eligible for the grant calculation. And finally, if you have a tax return which is the subject of an inquiry, HMRC will look at the originally submitted figures rather than anything that's changed as a result of the inquiry. And of course, typically inquiries arise because income has been underreported rather than overreported. So probably no surprise there that would be very much in HMRC's favour. So just some other measures really which were introduced. So that's probably all there is to say on the SEISS scheme. Business rates grants. There have been an awful lot of businesses which have benefited from this hugely. I know certainly Baber Council were doing grants of £10,000 for businesses which didn't pay rates. I think that increased to £15,000 for hospitality businesses. So if you haven't looked at business rates grants already, that is definitely worth a good look. We also have the business interruption loan scheme. This is for sort of slightly larger businesses with turnover up to £45 million. Business has to be based in the UK, and the business has to have been viable before the pandemic. If you're looking for a loan of more than £30,000 under this scheme, you also have to prove that the business wasn't in difficulty at 31st of December 2019. And typically this would be a 3-year loan for overdrafts or invoice discounting, or a 6-year loan if it's a straightforward loan or for invoice financing. And these loans are 80% government backed with no interest or fees payable for the first 12 months. The business bounce back loan is a similar sort of context, but perhaps for smaller businesses. Again, the business has to be based in the UK and it had to have been in existence at the 1st of March 2020. And again, has to have been adversely affected by the coronavirus. What you can borrow under the bounce back loan scheme is a minimum of £2,000, a maximum of 25% of turnover or £50,000, whichever is the lower. With these loans, they are 100% backed by the government. Again, there's no interest or fees payable in year one, but after year one, interest is chargeable at 2.5%. However, you can pay back at any time with no fees or any sort of comeback. So definitely worth having a look at that. And of course, I've already mentioned the July income tax payment on account deferral. This is deferred until January 2021, and you don't have to apply for that. It is, however, very much worth getting your tax return done as soon as possible so that we can quantify the amount of tax which is being deferred, because by the time we get to January 2021, there'll be the July payment on account plus the balancing payment on account, which would already be due in January. So definitely worth quantifying how much cash you're going to need to find January 2021. And then finally, the VAT deferral, that's due for, or it's available rather, for VAT which is due between the 20th of March 20 and the 30th of June 20. As I say, again, you don't have to apply for this in any way, shape or form. It's automatic. However, if you pay your VAT by direct debit, you will need to file the VAT return but cancel the direct debit. If you don't cancel that direct debit, HMRC will take the VAT anyway, and then you will be able to ask them for it back. But it's a hassle that businesses just don't need at the moment. And of course, it goes without saying, it's very difficult to get in contact with HMRC right now. Just a word of warning, if you do cancel that VAT direct debit, don't forget to reinstate it for the following quarter's VAT, because this only applies to that sort of March to June 20 period. So that's really, I think, all I have to say this afternoon on the SEISS. If there are any questions at all, then please do get in touch with us, hello@scruttonbland.co.uk, or please do email myself or Chris George personally. We'll be very happy to answer any questions for you. We are posting articles, guidance and updates very regularly on our website in the COVID-19 business support area. And you can subscribe to emails via the website and social media channels, and we will keep you as up to date as we possibly can as and when measures are announced. Contact details are on this screen. As I say, drop us an email or give us a call. But other than that, thank you very much for joining us this afternoon, and very much hope you'll be able to join us at our next webinar, for which you will receive the details very shortly. Thank you very much.